And of course, the Bank of Korea surprises nobody today by keeping those rates steady at record lows. Let's go straight out to Seoul with the very latest with Jun Yoon. Good morning, Jun.
Good morning, Adam. The Bank of Korea rate decision came in an hour later than usual, in line with markets opening later by an hour today for college entrance exams in Korea. The Bank of Korea is keeping the benchmark interest rate unchanged at 2%. They did cut it to a 4-year low last month in an effort to speed up the recovery, and most local economists surveyed had expected a rate freeze, so not much market reaction to this decision today. We do see a difference in opinion between the finance minister and the Bank of Korea governor, with the finance minister Kyung-hwan saying previously that he thinks there is sufficient policy room to boost the Korean economy through a rate cut, while a Bank of Korea governor Ju-yeol is a bit more cautious, saying previously that he sees monetary policy having limits in supporting growth. And he also says that the current 2% is sufficient in supporting the recovery. But again, analysts are pointing to the weaker than expected economic data that we've been getting recently, like the 0.9% quarter-on-quarter growth in GDP that we saw in the third quarter, and also retail sales data that showed a 3.2% drop month-on-month. These are cited as concerns for the BOK that this may mean further rate cuts down the line. And also speculation about another rate cut continue to stay on because of the extreme moves that we've been seeing in the Korean won against the dollar and against the Japanese yen. And analysts are saying that today's freeze is not the point. It's more about the guidance that they're looking for, that they're saying that this month's policy meeting minutes will be important in seeing how seriously the Bank of Korea is taking the FX moves that we've been seeing. Adam, back to you.
Thank you very much for that, June. And in fact, it's interesting that they've come up with that decision, even though nobody was expecting it, because it comes at a time when we're seeing huge gyrations and volatility in the foreign exchange markets. And a lot of people concerned, of course, about currency devaluation. Just want to get you quick flashes on statements out from the Assistant Governor Kent from the Reserve Bank of Australia, just coming out moments ago. Governor Kent went on to say that, the macroprudential steps being considered on home lending are modest ones. But I think what's more important here, we're seeing an immediate reaction in Australian dollar that's just ticked down a little bit, has been rather resilient, of course, the last few days. And Governor Kent says that he has not ruled out intervention on the Australian dollar. Says that the growth also to be below trend in Australia and won't pick up until 2016. He says that the Australian dollar is still relatively high. Falling mining investment and fiscal tightening is going to weigh on growth. And he reiterated again that the Australian dollar above estimates of fundamental value given falling resource prices. That seems to be the mantra that are coming out of the central banks down south, because the same thing we heard from the Reserve Bank of New Zealand as well. He went on to say that very low rates will continue to encourage households to save less and spend more, and says consumption will eventually boost jobs growth and lower the unemployment rate. But he played down concerns about sluggish growth in household income. So I think the takeaways here are that they're not ruling out currency intervention, which is very interesting, Pauline, because I can't remember the last time I ever heard the words intervention coming out of the Reserve Bank officials down in Australia. Meanwhile, staying with central banks, Bank Indonesia is also out with its policy decision today at 2 p.m. Singapore, Hong Kong time. No change expected, as the central bank is seen keeping the benchmark interest rate at about 7.5%. And that's despite fresh data showing economic growth fell to its lowest pace in 5 years during the third quarter. Now, this is the first meeting to take place since Joko Widodo became president. Widodo aims to push the economy's annual growth rate up to 7%.